the part of the central bank.
It's that time again when representatives of development finance institutions, government officials and economists converge to assess the nation's economy.
Yes.
The event, tagged the Nigeria's Development Update, throws a searchlight on the economy and policy recommendations for job creation, poverty reduction and economic growth over a 6-month period. This time, the World Bank's attention is specifically on the petroleum subsidy removal and the exchange rate unification.
In the last month, what we've seen are really, from our perspective, the beginnings of that move through these bold decisions that have been taken. I know they've been controversial, but the way I would put it, I like to use metaphors. It's a bit like when you have, internal hemorrhaging, and it's getting to the point where the patient is in critical condition. You have to do emergency surgery. It may be painful. It will come as a shock. But that emergency surgery is needed and it takes courage.
This is then followed by an analysis of how the recent policies of the government will impact Nigerians.
Inflation will increase this year, but then as of next year, we'll see inflation beginning to decrease as a result of the impact of this, meaning less recourse to central bank finance, slower growth of the money supply, better growth dynamics.
Done with the speeches, the conversations continue in a plenary discussion. While members of the private sector seek a well-regulated exchange rate regime that will favor investors, government officials speak on plans to ameliorate the sufferings experienced by Nigerians as a result of the removal of fuel subsidy.
What we are looking for is price stability. What we're looking for is an ability for investors to bring in their money and have a fair view as to what it's going to take for them to make a return in dollar terms, and remit their money.
We are all sure that with the right measures will be a temporary spike in inflation, and that involves using the World Bank's financial muscle to have a loan from the World Bank, which will be used as direct cash transfers for the poorest. That has long been mooted, and it's a policy decision or a policy recommendation that has pretty much been accepted.
These are definitely interesting times in the nation's economy, and the consensus here is that buffers be created to cushion the impact of the recent policies on Nigerians.